What's up, guys? So today I'm going to do sort of a trade recap, but I didn't take trade, so I don't know what's going on, and I don't have that replay thing, so you'll just see what I normally do. I'll show me trading on Monday, the whole things from when I start till I close the trade. But today I just want to show like what would have happened yesterday, what did happen yesterday, and what I would have done, how would I gone through with it. And yeah, so first things first, normally I would go to the 30-minute and I'll mark out all the sessions. So that is Asian session at 7. It's normally at 6, but for gold, see here 5:30, 7. So it's because maybe it's closed for gold. I should know, but I don't know. And 3 o'clock London, and lastly 9:30, which is New York. So now we have all the sessions marked out. What I do, I look for all the highs and all the lows. Mark out high, get away, mark out. I look for the high in 1 hour, not 30 minutes. Yeah, okay. Mark it out. Highs again, highs are green and red candles. I'm sure mark out the lows. I'm sure you all remember that. Okay, we are not going to mark out at start of New York session because obviously during the trade we don't know, we can't see the highs. I'm just doing this because like trying to imitate what would I have done. Okay, highs and lows. Alright, now go to the 4 hour, do the same thing. And yeah, alright, it's been marked out. Okay, so next, what I normally would do, I'm trying to, I'm still not used to it. I just saw TJ's new video, I think it was 1 week ago or something, and I haven't been trading much recently. I've been doing some other stuff. So yeah, normally what I would do based on his last boot camp and all that, I would check out the bias for today. And so how do I see the bias? I go to the 1 hour and I see what is the trend now. Okay, so as you can see here, now it's in a downtrend. I mean, like you can see it's going all the way down here, so obviously it's in a downtrend, right? See, it broke structure to the downside. Breaking structure means the candle closes below a low, or it closes above a high after the opposite of the trend. If it's in a downtrend now and it closes above a high, it's a break of structure to the upside, vice versa. Okay, so we can see here it's a downtrend, blah blah blah, normal downtrend, and then it made a high right here, correct? You see, it's not again, I'll explain, refresh memory. It didn't break structure for this high because it didn't close above the high being here. So alright, continue. Then now we look at the most recent high, and we can see here the candle did break structure right before market opens. So we're in an uptrend. Right, go to the 4 hour. Okay, you can see the 4 hour. You see, you think, it's probably a downtrend. Yeah, so did it break structure? No, it didn't break structure anyway, so downtrend. But no, look properly, you have to be very specific with this. Okay, now we go here. Okay, we can see here, we can clearly see, okay, it's an uptrend, right? See, closed above this high, it's an uptrend. Alright, it's going down. Now, did it ever go below low? Let's see, this is a low, correct? Did it ever close below this low? Nope. Now this is another low. You have to always look at the nearest low or the nearest high. It didn't close here either. So that means what? That means it's still an uptrend. Alright, now we know our bias is for buys. What are we looking for? We're looking for buys, obviously. So to look for buys, what is the strategy? We are looking for sweeps of liquidity from the lows, sweeps of the lows. Then it breaks structure, goes on top, retraces back, goes into our order block, into equilibrium. Then that's where we press our trade. Actually, you can add one more, maybe get a break of structure to the upside. So yeah, upside, because again we are looking for buys. All right, so now let's see. I marked out this low here. I think it's in the 1 hour. Okay, see here. Let's see. Let's look for sweeps of the down of lows. Let's look for sweeps of lows. So normally what I would do, I'll go to the 5 minutes and I'll see whether it's swept lows. Look at this. Here looks, I mean, it's, my line is here, and here looks like it's swept. So what would I do? I would go to the 1 minute. Lost it. Shit. So, okay, so here. Go to the 1 minute. Here. And it swept this low, so I'm going to put an order block here. I'll put an order block here. You know, the last push down. What's an order block? The last push down or push up before a liquidity sweep. So here, if this is a liquidity sweep, because it swept here, you think it's going to go down, but it went up. So that last push down before it goes up. So I mark this out. Now, what I normally do is, after marking it out, I go to the 1 minute, then I wait for a candle to go out of this range and then come back. It has to go out and close outside of this. So you see here, it went out. Now, for me to trade, it has to go back down. This is why I have started to incorporate breaking of structure to the back to the upside, because so many times it's invalid. Because I'll be honest, I would have taken, like, would have been ready to take a trade if I was trading. So I will be ready, because why? Because you can see here, equilibrium is, oh my days, equilibrium is, yeah, equilibrium 50%, TDI is 70 something or whatever, but yeah, just 50%. So it went out. You see here, all these candles, it closed above. Now it retraced back. It retraced back here, and probably would have taken a trade. Break of structure, bounce back, and boop. I would have put my stop loss below here, so like around here, and I would have gotten stopped out. Alright, as you can see. Why? Let's look at why. Because it did go up. It did go up. It did hit TP. TP would have been here. You know, not that much, not that big of a trade today, but it's still now. Why? I'm learning just as you, because I didn't check the markets today. No, yeah. Look at it here. It didn't close below here. What I'm thinking is, this should be an order block. Means, oh my days. Entered here and shut up. So many times my problem is, I'll share with you all, is that I can't seem to identify liquidity sweeps. I always think, oh okay, this is it, and then later it finds, see, look at this. This is a good sweep. It touched in here. Why? So let's talk about it. Now, if I followed this, it would be, I mean, let's go to my 5 minutes. So 5 minutes, and yeah, alright. Now, if I followed this, I would have been wrong. Why? Let's break it down. Because even though the lines are there, we cannot just follow the lines, because you can see it's not really any low. It didn't really sweep anywhere. Am I right? Just because the lines were in 1 hour and 4 hours, but it didn't really sweep there. Like, from what I can see lah. You see, it didn't really sweep these lows and sweep these highs. Cause why? It's not at the wicks. Primarily, we use liquidity sweeps in the wicks, okay, not the actual body. Of course, it will look like that in the higher time frame you go, correct? If in the 1 minute it's a sweep, then 5 minutes maybe it's not. So what would have been a valid play? Let's look at this line here. Ooh. See, let's look at this line. Let's look at this line right here. Let me just change the color so it's more obvious. Ooh. Alright, yeah. See, so you can see here, swap liquidity and up. So what do? I don't want to go 5 minutes because sometimes it's too big. So let me go to the 1 minute. Let me just mark out here so I know. Okay, so see, it went down. The last push down before it goes up. So it'll be from this candle to here in 5 minutes. But I don't want to do that. I want to go to the 1 minute. So honestly, just took up the whole thing. The last push down before the push up, and like I said, I wait for it. So this candle right here, it closed. Look at it, it closed above. So that's one. Now retracement is, it has to touch my order block. So two confluences ready. Now we see equilibrium. Equilibrium is this bottom part, and it didn't go in. You see, it was here, it barely touched it. So what would have been my move? I wouldn't have traded. Anyway, thinking like, what the fuck? It went up just like your buyer said. You were looking for up. Like it touched your box. Yes, but it's not enough to force me to make a trade. I should have to take a trade only when the market forces me. Every day you go into trading, your mindset should be, I don't want to take a trade today because I don't want to lose money. Obviously, you want to be profitable, and that comes with risk. You need a risk analysis, you know. You have to manage your risk well. So, that being said, it has to force you to make a trade. You have to be like, alright, if I don't take this trade, I'm stupid. But this right here, it didn't look, you know, it's not really giving me everything I wanted. So yeah, don't take a trade. I'm not going to lose anything. What am I losing? I'm not losing any money, and I'm gaining more experience in the market. I'm analyzing the trade right now, and I see, okay, what's happening. So what am I noticing in myself today? I noticed that I can't seem to get the liquidity sweeps right, because I thought it was early at first, and then later, you know, it still went up. So what I'm going to do over the weekend, I'm going to recap back with TJR's trades and look through his videos again, and hopefully maybe I'm missing something, maybe it's just market experience, and by Monday we'll go through it live. I'm excited for that, and then we'll see how it works, right? So yeah, I wouldn't have taken a trade today because it didn't give me enough, and yeah, it wouldn't have done, a lot for me also. Okay, yeah, I would have went for this. It hit. That's it. It's better to not take a trade than take a half-ass trade. Keep that in mind. If you take a half-ass trade, you're not confident, you're just going to be pissed at yourself afterwards because you lost money. You're just going to be mad, you're going to be more nervous every time you take a trade. No. Take a trade when you have to. You know what? Everything makes sense. Everything my checkbox is tick, 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 tick. I have to put the proper risk. That doesn't mean full pot it. No. Still give the proper risk. Maybe use 2%. Yeah. And then after you take a loss, if you take a loss, don't be pissed. You should be happy. Alright. At least I was disciplined enough to listen to myself, to not follow my emotions, but follow my plan. Follow my planning. Right? Maybe I'll talk about planning in the next video. Planning your trades. Alright? So that's about it. I'll see you guys on Monday. Alright? Peace.